Good evening. I'm Peter Resnicek from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly for Sunday, October 10th, 2021. New screen, new studio. This is the Dell 86-inch touchscreen that I've been showing you in prior videos, just using it as a backdrop, and now finally I've got everything set up and it is going to be put to work in its intended form as being a touchscreen presentation for these videos. So I do hope you enjoy it. Leave me some feedback down in the comments below. Tell me what you think of the new format. And also, please click the like button if you can and subscribe to this channel so you'll be alerted whenever I post new content. The title of this video this week is How to Spot a Turn. And some of this may be very obvious to some folks, but given the price action we saw this week, I'm pretty sure that it's not obvious to a lot of folks, because you understand when you see huge rips and dips to the upside and downside like we saw in this past week, big volatility in the futures market, that is generally indicative of a lot of people putting on the wrong position at the wrong time and then changing their minds very quickly. So I thought it would be really apropos to talk about what are some of the things that you can be looking at in charts that can help you to not get caught up in this whipsaw action and know when a trend is actually continuing and when a trend is actually going to reverse. So for that, I'm going to specifically look at two different futures charts in this video. We're going to start with the ES, and then we're going to move into the NQ. And for both of these, we're going to use the hourly. I like hourly charts, 24-hour on ES and NQ, to give me a very good idea of where trend lines are, where trend is, et cetera, et cetera. I feel like this is the perfect time frame spread out over a big chart to show you exactly what's going on in the markets. It's essentially not too granular and it's not too wide out like going out to a weekly or a monthly. So in this particular ES chart, what I want you guys to focus on is this section right here, basically. We're going to focus just on this section right here, which is essentially the hourly chart of coming into late last week. This is Friday here. This is the overnight activity Sunday night. And then this is the week that just passed. Extreme volatility, as I was saying earlier. You can see the swings, how you have down, all the way up, all the way down. Big swings all over, okay? But the first thing you want to notice and understand that this is happening in the context of a bearish pattern, right? Everybody thinks the market is down. People are coming into this market bearish this week. But here's a couple of things that I think people may have missed, and I hope this can help you out. The first thing you want to notice is that if a market or instrument, stock, whatever it is you're watching, if it is indeed in a downtrend and it is going to continue that downtrend, no matter how volatile the situation is, the market must make lower lows. And if we look at the pattern on what happened this entire week, where we came in here on Friday, look at the lows here. Notice that no matter how wild the volatility was, even when there were huge swings like this, where you saw massive retracements, at no point in time this particular week that just passed did the ES make a lower low. And that's really important. And this is why people are getting caught in these markets, you know, shorting at the wrong time, et cetera, down in these areas thinking, oh, it's definitely going to go lower, or they're holding on to their short positions too much and it's going horribly against them. And again, this is why you see these huge rips to the upside, because that type of emotional activity is almost always caused only by short covering. And that short covering comes basically because it is when everybody's perception changes at the same time, all at once en masse, and everybody has to get out of the old position, and then a lot of those people are starting a new position. Now let's get into the NQ, which is I'm going to show you is a little bit more granular than the ES. And the NQ really was very, very important this week. I felt that it was really the NQ that people needed to be watching more than the ES for clues to market direction. If you think about it, this particular week, there was a lot of negative news on Facebook, the testimony, the whistleblower thing, all that stuff, that was negative. It just felt like overall tech was really driving this market lower. And you can see on the NQ chart that I have here, which is the same hourly as we had on the ES, except I've condensed it a little bit just to show you more activity. It's a little bit wilder in terms of the swings in the NQ. But again, similar to the ES, we're just going to focus on roughly the same area, coming from midweek last week, a little bit more data, and then Friday, and then again the Sunday overnight, and this is our week that just transpired. Much like the lower low theory that I talked about, or a dynamic. I shouldn't say theory, it's more of a dynamic, much like that lower low dynamic that I just talked about in the ES in terms of what needs to be in play in order for a downtrend to continue. In this part of the presentation, looking at the NQ, we're going to talk about retracements. And we're going to show how the retracements in terms of coming down and how much you bounce matter. So if you look at the downtrend that's in play all the way from here in the NQ, you can see that when the downtrend begins, obviously the retracements are very shallow, and that's important. So you want to kind of think about that when a retracement is very shallow, the odds are that you will shoot lower, right from there. So keep that in mind. So again, you make a lower low, and again, the retracement is very, very shallow, okay? Then you start to come down, and here's where things get interesting, where I've drawn the downtrend line. When you bounce here, you bounce quite a bit higher than you did in these two instances, but you don't make it all the way to 100%. We're gonna draw a straight line kind of going across like that, and that'll represent like our 100% retracement from this point right here. Okay, then we go down again, we make a lower low, and then what happens when we bounce? Again, we fail to go as high, because 100% retracement would have been right to that line. We come down again, we make a lower low, very, very violent move, obviously, tech catching a lot of selling. And again, when we bounce, we make a slightly lower high. We're consistently not making it 100% all the way up, and that's interesting for a couple of reasons. One is we want to know the difference between the bounces, between what's happening at the end of last week and this week compared to what happened when the trend began, correct? When the trend began, it was huge move down, very little up. Huge move down, very little up. Here you have big moves down, but a lot of up, even though it's not making it 100%. And that brings us into Wednesday, which is really the kicker here, where everything gets really interesting. And you have this last sell-off. First thing to note, higher low. Right there, it's very, very important. And again, this is simple, stupid stuff, but a lot of people miss this, I feel, because they're continually caught up in the fundamentals. They're caught up with what they're hearing on television. They're, thinking about this negativity in Facebook, whatever the case. All of this is driving their decision making, and it's keeping them from being more objective about the markets and seeing what's really happening. So here, very important, Wednesday, failure to make a lower low actually puts in a higher low, and the retracement then goes up 100%. It makes it all the way to the line where it started, and it's a 100% retracement. And this is very important, because this coming into late Wednesday is the exact moment when the greatest amount of people are collectively screwed. Literally, because they don't realize that this is happening and the session is ending, and they think that overall, well, the trend is still down in the bigger picture, which it is. Obviously, in the longer term picture, it's still down. But in this shorter term sort of microcosm here of this particular price action that was building out from this week and a half or so, the trend is, the downtrend is clearly failing. And you have this 100% retracement, and right here, this is late in the afternoon on Wednesday. And that's why when you look here, this was actually my Twitter that week, and right here on late Wednesday, this was my exact comment, this was late on Wednesday afternoon, if you are still short anything except biotech in this market, there's a good chance that you're going to wake up hurting bad tomorrow morning. And as we can see, that was exactly the case. This is the overnight session on Wednesday night into Thursday, and it was just like boom, off to the races from there. And when this was setting up here, okay, I don't have it here up on the screen, but in my pro trading room, I was talking about this a lot, constantly alerting my subscribers as to what was going on. And one of the things that I said to them in an alert, I said, the odds are very strong here that if the NQ, or I should say any pullback here overnight in the NQ is buyable. Basically, those are my exact words. Is when I saw this setup of the 100% retracement, I said any pullback in the NQ is buyable. This was so bullish, or had so much pent-up demand from all of these people, I think, short at bad location, that understand we didn't even get any pullback. There was a small pullback after I made that comment in the NQs that was like 3:45 p.m. or so Wednesday, I can't remember the exact time. Very small, like from the 700 level down to like 682, almost nothing, and then no pullback whatsoever overnight, and it just took off from there, okay? So it's very, very important when you're trading, just to recap, be aware, you need lower lows to keep a trend going. Also, pay attention, very important, to how much the market is bouncing each time that it bounces. Do not confuse huge volatility, okay? Don't confuse huge volatility for trend, basically. Volatility and trend are two separate things. Lots of people, I think, who were caught in this move were thinking because there were these huge up and down swings and the volatility was elevated, you had these rips and dips going back and forth, that the trend was definitely continually down. But if you look closer at the charts, especially when we looked at that ES on that hourly, the market was failing to make lower lows. It was acting very wild. There was a lot of back and forth, but it wasn't really going anywhere. And that's really important because as it's not going anywhere, think about what it's doing to sellers. It's sellers that are getting hurt. Like, you always want to think of every move in the market in terms of the context of who's happy, who's disappointed. That's just basically the way that I look at all markets. I think that trading is nothing more than being on the right side of who's happy or who's disappointed. And this type of situation disappoints a lot of sellers en masse. And you have to understand, obviously, since the trend is down, it's basically going to be sellers that are most disappointed. And as this volatile action continues and builds and you're failing to make lower lows, also think of it as pressure. Think of this whole area almost as though the moves up and down are a can of soda being shook, right? And here's where you open the top, or it just bursts open, the top just blows open like that. So think of it that way. These are all dynamics that I think can really help you in your own trading if you pay very close attention to what's going on. All right, now let's get into a wider view so we can see actually how that crazy price action from late last week and that change in very short-term trend, see how it affected longer-term trend and see whether or not we've actually broken this downtrend or not. So my opinion is that we have not yet broken the downtrend. We're still in a downtrend. However, given the price action that we're seeing here, I think it's going to be a little bit more difficult after what we saw at the end of this week for the market to, move back down aggressively. So first thing you want to do, as with any figuring out of trend, is just simply draw your lines. I am very, very particular about my trend lines. Trend lines really are the bread and butter of what I do. I think they're the most important thing. They're kind of the most important tool that you can have in your toolbox as far as reading charts and figuring out direction. So very simply, there's two different ways that you can draw a trend line. One, which I call the swing out method, which is like the first touch method, meaning that you have a starting point and you just take the trend line out and you swing it out and down, and wherever it touches first, that's basically your trend line. That's one. The other method is what I call the most touches method. Both can be accurate. It just kind of depends on the chart. More than likely, usually, you're often using the swing out method first, basically. Usually, you can just go with the swing out method, but there are some times when it does make sense to look at both trend lines and maybe switch to the rule of most touches. As you can see here, it seems like it's a little bit more accurate because if we use the rule of most touches, starting from the same starting point, look at how many touches there are almost perfectly. I mean, actually very perfectly. Look here, here, and here, right? That trend line is really respected here and here, right? Right after it's established here. So this trend line, I believe, is the one to go with. And if you see that, you can see that on Thursday in the cash market, we did break trend just by a little bit, right? Broke trend and then failed, came back. And then Friday's action was more of a consolidation day, just basically underneath. Another thing that's extremely important whenever you're looking at a bounce is to look at that bounce in context of the initial down move and look at a simple Fibonacci retracement to see how far the bounce has gone. Always understanding that any bounces that can close a daily bar above 61.8% of that initial down move essentially put that down move into serious question and bring the all-time high back into play. We're not seeing that just yet. As you can see from the chart right here, if we strike the Fibonacci from the top all the way to the bottom, we touched on Thursday's action right to the 50% line. We actually went up and over a little bit and then failed. And then Friday's action was really just a consolidation of sorts, very inside day. I call that a balancing day. In the context of what's going on, I think it is bullish. Notice that in the S&P, there's a huge gap below us here. And you can see that a little bit clearer on the futures charts. That sort of gap action is something that I talk about all the time in my pre-market perspective newsletter, where we analyze the overnight activity versus the regular trading hours activity in the ES futures. And I talk a lot about gaps. And a lot of what I was talking to my subscribers about on Friday and Thursday as well was the fact that this gap was established, and notice that Friday's action did not fill it. So that's really kind of bullish to me. It's more bullish than bearish in that we didn't come down into the gap at all right? But in the bigger picture, keep your trend in mind. And what we want to be looking at basically is, have we broken trend yet? Not yet. Still have a downtrend in place. And again, I'm drawing from this line. But given the pattern that I'm seeing, right, kind of feels to me like it's going to go like that. Meaning that this price action here will be difficult to get back down into. I think that shorts are nervous. I think they'll be buying the market. Obviously, anything can happen. But if I had to project out into the future how I foresee this playing out, I think this is more of a inverted head and shoulders pattern that builds out. We have some sideways action here next week, and then we start to move up again to retest rather, that 50% retracement again and that 61.8. Keeping in mind, which is very, very important, that if that 61.8 gets crossed and you get a daily bar that closes above the 61.8, the downtrend is completely finished. There's no chance for the sellers, and basically that puts the all-time high right back into play. Let's shift gears for a second into the NDX. So it's this cash market of the NASDAQ 100. If you've noticed a theme in all the videos that I do, it's really two markets that I'm most interested in, which to me are the market, and that is S&P 500 and NASDAQ 100. Not that there are not opportunities in the Russell or the Dow, but really what is driving the market as a whole is the price action in the S&P 500 and the NASDAQ 100, and that's really, really important. So in this NDX cash, a couple of things that we need to carry forward in our narrative. Firstly, as far as the fib is concerned, we didn't make it up to the 50. It was a lower bounce. I think that has to do with the fact that the NQ was weaker on the way down, so it had a little bit more work to do on the way up. But that is definitely noteworthy that we have not yet reached the 50, and also in terms of the bounce to the trend line, if you notice where I've drawn it here in the NDX, starting from here and moving down, perfect touches. That's a swing out method, works perfectly, touches all the points. We did not yet even make it to the trend. Remember when I showed you the SPX cash chart, we actually broke up and over for a little bit of time on Thursday and then balanced on Friday. So that's the situation there in the NASDAQ. It's a little bit weaker, plus coming up just above. Pay attention, you're going to have your 20 and 50 period daily moving averages as well. But in general, as we know, even though there can be somewhat of a divergence, especially intraday, right, which is more of a thing you need to pay attention to for day trading, these two markets do follow each other. So that being said, I think that the pattern plays out the same. We shall see. But again, just keep these signposts in mind. I like to use that word signposts all the time with my subscribers, and when I write my pre-market perspective in the morning, I think it's so important to think in those terms. Remember, if you take the market as a whole and you break it down into smaller pieces, then it's much easier to figure out what the direction is rather than worry about the big, sort of directional move as a whole. Are we going to go back to the all-time high, or are we going to crash, or whatever? If you break it down into small chunks, it's so much more palpable and easy to digest. So when we come into next week, where's my focus going to be? Okay, will the NASDAQ 100 fill its gap? If so, does it go deep into this range? Can it break trend? Can it get to the 20? Can it get to the 50? Et cetera, et cetera. My entire MO is constantly just looking at these very short-term signposts of just what's ahead, and I'm using those signposts as the market either crosses them or doesn't cross them to tell me how strong or weak the market is. And that's all for this week. Thank you as always for spending a little bit of your weekend with me. So again, please leave some comments down below. Smash the like button and subscribe to the channel. But most importantly, give me some feedback on what you think about the new setup, new studio, using the touchscreen TV for the videos. This is something that I'm going to be getting into a little bit deeper as we go on. I'll be doing some training videos, and hopefully I can continue to do the weekend presentations this way. All right. As always, if you're interested in learning and trading with me, more actively during the day, hit that link up in the corner right there. Weekly Options Advisory is what I offer, $49 a month, never a contract, you can cancel anytime. Live trades straight to your mobile, live sessions, pre-market throughout the day, private webinar on Thursdays, plus you get a free subscription to the Pre-Market Perspective newsletter that I mentioned in this video very often, which is my market profile read on the market every day before it opens, comes to your inbox at 9 a.m. Eastern, so you have plenty of time to digest that information. All right, I hope to see you there. Again, just hit that little link up there in the upper left if you'd like to see more of what I have to offer. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.